Well, hello everyone. Welcome to Swing Trading. My name is Barbara Armstrong. I have the pleasure of filling in for Mr. Mike Fairborn, who has a well-deserved day off today. So we are going to talk swing trading. That's the topic of today's class. And the market is pulling back a little bit today after a pretty aggressive run to the upside. So there's lots of bull flags setting up. The challenge is that a lot of them we don't have, official entry signals on them yet, but we're going to talk about, what some of these patterns are and how we might, do a swing trade. Let's say we're here today, but then, going to be gone for a few days and we don't want to be checking a lot of these positions on the daily. We could put in a conditional order to get in on some of these, and so we're going to talk about conditional orders. We're going to talk about patience in the land of swing trading. We've got Ben Watson with us in the chat today, and I'm seeing a lot of familiar faces. And I said, little Ben today, a little James today. It's been a good day, with James, having both James and Ben in the chat. And someone said, that sounds like a wine company. Boone Farms. And it's like, but James and Ben, it wouldn't be a cheap wine company. I can say that. It would be quality because they're two absolutely outstanding coaches. So if you've got questions, feel free to type them into the chat, and Ben will be here, to regale you with great answers, I am sure. So, and if you're not following us on X, you're missing out. So Ben Watson CS, Barbara Armstrong CS, we're now both in the land of LinkedIn as well. So you can wander over to LinkedIn and follow and, find and follow us there as well. Just know that before we get into, today's material, that, everything that we're talking about today is for educational purposes only and general information, nothing to be construed as a recommendation on the part of Schwab or myself. We will look at some options trades today and know that options carry a high level of risk and aren't suitable for all investors. Also, we'll be using the Paper Money software application on the Thinkorswim desktop platform. And this is a brilliant place to learn and make sure you understand both how the platform works and your trading strategy. And there are some nuances and differences between it and a live account. And we'll discuss those as we go along. Okay. So let's get right out to the platform and have a look. So when we look at the S&P 500, we were officially in correction territory, and then it turned around and it's had this extraordinary move to the upside. And what is so extraordinary about this move? Well, we've gone up 13% in 21 trading days, basically. I'd say that's extraordinary. And on the NASDAQ, it's probably been even bigger than that. But what we've seen, and if we want to talk about, bull flag patterns, which was the topic of getting started with technical analysis today, which we just taught, it came up, we had a 1-day pullback, came up, we had a 2-day pullback, came up, and along the way hitting new all-time highs. And today we have this pullback to the 10-day moving. This is a 10-day moving average, this blue line. And what I think is particularly bullish about this candle is that, it opened higher. We have this doji candle setting up, but it opened lower. It's currently trading higher than where it opened. And so that's, interesting, but it's hard, even though we see that, we're down almost 1% on the NASDAQ, this hit a new all-time high. So it's hard to be bearish when we're hitting new all-time highs, right? Up almost 20% in 20 trading days, and until today, where we're down like 1%. But again, this candle is indicating it opened lower. So it opened lower and it's rallying. And the reason there's a red line around this candle is because it's still trading below where yesterday's candle closed. Now, on some charts, my candles may look different than they look on some other coaches' charts or on your charts. And that's because I use candle trend. And so the reason that candle looks the way it does is because I have it showing that candle in relation to the candle of the previous day. Okay. Otherwise it would, it would look a little different. Okay. So like if we came and I wasn't using candle trend, just regular candle, it would show this as a bullish candle. And it is bullish in that it's, trading above where it opened, but it's still, red in that, it's trading below the candle of the previous day. But that's why I have it as candle trend. So just to explain that, if you're wondering why the candles are looking different, because I get questioned on that fairly frequently. Yeah, and so Jay is saying, why are some of the green candles filled in and others just outlined? So this green candle here is filled in because it opened higher and it closed lower, but it still gapped up and closed way above the candle of the previous day. Now, if you were using plain old candle, this would show as a red candle on your chart. And so a green candle filled in means it opened higher, closed lower, but still closed above the close of the previous day. And so if it's a red candle, so this solid red candle means it opened here, closed here, and closed below the low of the previous day. This is just has a red outline because it's trading lower than the previous day, but it's up within the day. Okay, I hope that makes sense. Yeah, Riceberg is saying you got me hooked on using candle trend. Yeah, like it just drives me bananas. Like, and maybe I'm easily driven, I don't know. But like for this candle to be a red candle when it moved, it was up almost 3% that day. For that to be a red candle, I think is sacrilege. And you may say, I seriously need to get a life. Well, when I leave here, these things don't bother me. But to me, for that to be a red candle, seriously, people. So that's why I use, that's why I use that. Okay, I'm switching it back. You're going to go, are we going to spend the whole class going back and forth on candle trend? Yeah, no, we're not. Okay, so, but our focus today is going to be, more on bullish opportunities, because when we look at the general market, are they not bullish? And if we're trying to go within the flow of the market, if we're trying to go within the flow of the market, the market is, even though we're seeing this pullback today, the market is pretty darn bullish, isn't it? Yeah. And we don't have to look just at flag patterns if we're doing swing trades. Like if we look at NVIDIA, for example, so NVIDIA was going sideways from September through, the middle of April. And, now we're kind of getting closer to the end of April, and we had it break out of this sideways range. And then, one could argue that this is a bull flag. And then today it opened close to the open of yesterday's open. It hasn't quite rallied all the way. But, 214.50, if we were to do a swing trade, well, the previous high is only 216.83. So that's a pretty smart, that's a pretty, short swing. So we're looking for something that may have pulled back a little bit more that gives us more of an opportunity, to come up to our swing target. So if we look at something like American Express, and this is a stock that, was moving to the upside, and there were a lot of swings within this. And by that, I mean, if we take a step back to look at this, and we're not going to get like in the weeds, but we're seeing a series of higher highs and higher lows, but some pretty big pullbacks. These aren't nice, gentle little pullbacks. This is like, if you own this stock, it may require the use of Tums. And then it started like tumbling down the hill. And so then we started seeing, lower highs and lower lows. And then we had this period of consolidation, and now it's kind of broken to the upside. and it came down here. And you know, when I looked at this, and I've looked at this a couple of times today, this is a $300 stock and it's down by $1.29. You know, this was looking up, and it opened higher today. And so this is one where you might consider doing a swing trade and say, well, you know what? We had a resistance level here, and it's come up into this same neighborhood around this 340 mark, you know, and hit that a couple of times. So could we, if we bought some shares, and we could put in a conditional order to say, hey, if it goes above today's high, we'd like to trade this back up to 340 and do a swing trade, because, you know, it was uptrending and then it was downtrending and then it was going a whole lot of nowhere, and it looks like it's breaking out and is maybe going to move to the upside again. And we don't necessarily want to be, you know, in it the whole way, but we, you know, and my line of late has been like, let's say you're saving up, if you're Ben, to go to Disneyland, you know, because Ben is a big fan of Disney, all things Disney, for his next trip to Disney. You know, might he say, well, it could take, you know, it could take months. Like, you know, if we look at this here, how long did it take to go from here to here? You know, it took, you know, 98 days, almost 100 days. Well, if he wants to go in June, like, he may not want to wait, and because it could take another 100 days and it may never get back up here. But, you know, if the swing trade were to work out and we put in a target, our swing target around this 340 mark, or call it 339, you know, might that work? And if we said, okay, well, today it opened at 321.70, or today the high was 323.70. So let's make it 323.70 plus 50 cents, or plus a buck, because it's an expensive stock. So 324.70. And then we want to get out if it comes to 339. So you could say, well, is that even worth your while? So, and from a stock perspective, you might say, well, 339 minus a 324.70, you know, 1430 is what we could make. You know, and if we did 100 shares, that would be $1,430 into the kitty for Disneyland. You know, and if we divide that by our price of entry, 324.70, that's a 4.4% return. How many people think that a 4.4% return is really shabby? It's like for something we might be in for a week. Like, I'm sorry, I'd take that 6 days a week and twice on Sunday if I could get it. And it's not saying that we will get it. And this could pull back again tomorrow, or it could be bullish by the end of the day. We still have 45 minutes till the market closes. But if we put that in as a condition, and if it met it, you know, we could say, well, you know, we'd be cool with that. And then on the other hand, if we're looking at this and saying, here's a recent support level around that, you know, 311 mark, we're on the other side of earnings, you know, and here was our recent low at 312.50. I'm just going to write that down. So if we multiply that by 0.97, say if it goes 3% below that, that's not going in the right direction. So we're going to put a stop in at 303.12. And then, you know, one of the things you may want to do is come out, because we're just on the other side of earnings here, right? And it beat on earnings from an EPS perspective. The estimates were $4.03 a share. It came in at 4.28. And so if we come over and it's like, well, like, what do the analysts say? Because they look at this stuff all day long. You know, well, they maintain to buy, raise the price target to 400. Here's where 400 is, way up here. You know, Autonomous Research raised their price target to 374. It kind of blows my mind, you know, how wide ranging these are. So Jefferies went to 350, Deutsche Bank to 450. And then we have this guy, BTIG, is saying, I give this a sell at 285. And like, who's right? Well, I would say, here's your outlier. Which one is not like the other, to go back to Sesame Street? Because all of these guys are raising price targets. So we seem to have more of a bullish consensus on this stock. And if we say, well, we're being bullish for just a short time. Okay. Okay. So we're going to go in and put this trade in. And we're going to do this one with stock. And so we're going to buy custom with an OCO bracket. Our target is going to be 339. 339. Our exit is going to be did I say it was 303.12? 303.12. And we don't want to buy now. And you might say, like, why not buy now? We could make a lot more money than if we wait to get in to 324. Like, that's costing us $700. Well, yeah, but then your confidence that it's going to be a successful trade is going to be higher. Your probability is going to be higher. So we're going to make this a market order. We're going to make all of these good till canceled. And this, we're going to say, we want to get in only if American Express goes above 324.70, today's high, by a dollar. Dollar bill. 324.70. Now, is this a set it and forget it? No. Like, even if you're planning on doing something really fun tomorrow, what you're going to do is, at the end of the day tomorrow, you're going to take just 2 minutes, 1 minute if you're quick, and you're going to say, did we get into this trade? And if we didn't get into this trade, so this is going to be, a stock with a target, and this is a swing target. So we know what our target is and why we put it there. And we could even put this on the chart. We can put a label on it. Say this is our swing target. Show that on the right. So we know what we're going for. But let's say tomorrow it pulls back again. So let's say tomorrow this happens. So and then the next day this happens. And then the next day this happens. Because that could happen, right? Well, then at the end of each of these days, what a trader might do is they might say, well, I wanted to get in when it came above here. So now I'm going to look, in this retest of this support level. So this is, coming back to retest this support level. I'm going to change my entry to be to get in here, and then to get in here, and then to get in here. And then if it breaks below and it keeps on falling, and we end up not in this trade, I will have considered this a success. Why? Because we prevented ourselves from taking a losing trade. And then let's say we get in on this fourth day, and then it comes up. Well, we got in a lot earlier than if we just sat on our tookus and didn't get in. Like, let's say we ended up getting in at 320 instead of at 324.70. So that's another 470 in profit we might earn. Excuse me. But it's just about being disciplined and saying, okay, this, I'm following my guidelines. Yeah, and somebody had said, I looked for this bounce and I did a short put vertical trade. And that's another bullish, that's a bullish to neutral strategy that some traders might consider using. But today we're talking swing trade. So we're sticking with the topic at hand, right? Right. So for the next, 20 minutes or so, I'm going to continue to talk swing trades, and that's why, because that's today's topic. Okay, so there's our conditional order on AXP, and I'm not going to put a circle around, entering today, because in fact we aren't entering this trade today. Now, if we wanted to look at a swing trade on a stock that's moving bearishly, this is something we could have considered, but now Tesla has had a diagonal resistance breakout. It did come with earnings. It beat substantially, like it doubled, what it doubled what the analysts were expecting, and we do have people raising their price target to 428 from 424. We're currently at 337, 372 from 382. So this one is down. Phillips raised their price target to 220. Like, they're not even on the chart. Like, it's just interesting to me how wide ranging even these analysts can be who, look at this stuff all the time, right? But if you're a fan of Tesla and you're saying, well, I see this diagonal resistance breakout, even though I may have placed some bearish swing trades, could I place a bullish swing trade? We're at 376. We've had this period of consolidation, and some might want to wait for a clear close above the high of the low day. But from a technical perspective, we had a bullish engulfing pattern here on this day, which is considered to be a complete pattern. And I feel like this is kind of like the Russian stacking doll syndrome, because then we had a bullish engulfing pattern again. So a bullish engulfing of the bullish engulfing pattern, which is also bullish. So it's bullish, bullish. And then we have some might argue a bullish Harami pattern here, where it opened lower, closed higher. That's why this candle's red. But it's an inside day, all of these happening at a potential support level. And so, some might say, well, I could see this coming back up to around this, and we don't have to go all the way up to this high here of 409. Like, could we trade it up to 400-ish? And so again, this would be a swing target. And could we do this with stock? We could. Could we do this with an option? We could. Now, what's the difference, with a stock? Okay, I'm sorry, I shouldn't be laughing. I'm not losing my mind. I'm just reading the chat, and Ben is teasing me for being Canadian. And I do have flags, and I'm not afraid to plant them. So that's all I have to say about that. Okay, so yeah. So with Tesla, now I've totally lost my train of thought. He's saying, if only I had a Canadian keyboard, I could, be doing this. I could be spelling for you. Yeah, it took us. That was an expression my grandmother used to use. So maybe it's Canadian. I don't know. Maybe it's international. Yeah. So, when we look at this, if we buy the stock, we've got time. Because like if it like kind of moves up and doesn't quite get there. Now, if it gets to 385 or 390, we might say, you know what, that's good enough. We could also buy a call. And if we bought a call, we're going to spend a lot less money. We're going to invest a lot less money. But it's it's going to have an expiration date on it. And the more so we can buy ourselves more time by coming out further in time, and this is a very heavily traded stock. And so we'd want to come out, I'd say, until at least June, so that gives us 50 days. So if we say, well, I'm only expecting it to take, maybe 10 days, 5 days to get there, but I want to have at least, I want to have at least 20 days, 20 to 30 days plus the amount of time. And so if you say, well, we could come out to June 5th, this is such a heavily traded stock, but like these options, you're risking $1,800 to, $2,000 if you're buying it at the money strike, and you could lose all of it. Now, if we buy shares of stock, we could lose all of it also. But what I'm going to do is we're going to we'll place 2 trades. And then if I get to fill in for Mike again, we can compare and contrast them. Okay. And a lot of people will look at, an at the money strike where, if this comes up, if this goes up $1 in price, then the value of this option will go up by 52 cents. In our trading a smaller account, if we wanted to do this trade, we would be making a decision on the strike price based on the price of the option because, we're in that class, we only have we started with 25,000. We'd be coming out here to this way out of the money strike that has a delta of 19, and you say, well, would that even be worth it? But if I base it just on the bid to make it apples to apples, and I say, but if it went up 19 cents on a $4.95 option, that would be a 3.8% return. If it went up one day, all other things being equal, volatility not changing, where this 52 divided by 1835, that would be 2.8%. So as a percentage gain, like this may look less attractive, but it's 19 cents on a $4.95 investment versus 52 cents on an 1835 investment. And you might say, well, to be more apples to apples, we're going to pay closer to the ask price. We should be using that. Well, I use the same one for both. I'm just trying to give you a sense of how we look at things, how you might choose to look at things. So, and I wouldn't think this was any less interesting a trade to buy, this far out of the money strike as to buy the at the money strike. But we'll just go with the at the money strike. Some people prefer to buy in the money. It has more intrinsic value, but this isn't a class on options. It's a class on swing trading. So, and just with a swing trading plan with an option, what we're going to do, we're going to buy custom with an OCO bracket. And so we could lose up to $2,030. Let's just see if we can get it for 20 bucks. And then we're going to make this a market order and say, we don't know quite what it'll be worth, but the expectation is that it'll be worth more. But we want to get out if it goes at or above, and what was our target? 400? When Tesla goes at or above 400, we'd like to exit this position. Okay. And if we lose half the value, we're going to exit. So if it goes below 10 bucks, it's either not moving up or it's lollygagging about. It's going sideways and it's not moving fast enough so that time decay is starting to eat our lunch. And the reason we're coming out, this 38 days as opposed to doing the monthly. So this is going to be a long call and this is a swing trade. Swing trade, and we're going to compare to the stock. So how much could we lose? We could lose all of this just because we have a stop in that says, hey, if this becomes worth $10, sell it. if it gapped down dramatically, we could lose, we could get out at a price a lot lower than that $10. So we need to position size based on max loss. And in this account, we're saying we don't want to risk more than half of 1% of, so we don't want to risk more than about 2,500. So we're just going to do 1. Okay, so fire in the hole. We're going to send that in. Okay, now if we wanted to do this with stock, we couldn't buy 100 shares because we want about a $25,000 position, which is 5% of the account. So if we said, well, it's trading at 377, so we're going to take our 25,000 divided by 377. So we're going to buy 66 shares. Oh, and we're not going to put in an exit at half the value. Here's our recent low was yesterday, 364.02. And so we're going to say, hey, if it goes 3% below that, not going according to plan. So we would rather take a little loss than get hammer smashed on it and take a big loss. So we're going to put our stop at 353, 353.09. So when we come to our trade tab, we're going to right click, buy custom with an OCO bracket. Say we want out at 400. Or if it comes down and does not go according to plan, 353.09. And we are going to do, how many shares did I say? 25,000 divided, I think it was 67. Might have been, 66. We're going to do 66 shares. Now we are risking $24 a share. So if we say, well, if it was 100 shares, that would be 2,500. And so we're saying we either want to sell if it goes above 20, if it goes up 2261. So it's close to a 1-to-1 ratio here. If it goes above 400 or if it goes below. And you can, create, we're putting this in our stock with target group. We're going to say it's a swing trade, but you could create a group that says money for Disney, money to support Ben Watson's GoFundMe for Disney. Swing target. For me, it might be Paris for Christmas. So swing target, compare to our long call. There we go. Now, if we wanted to do some additional practice, would anybody else? Yeah. I'm just looking at questions here. Yeah. Yeah, so somebody mentioned Mickey D's. Is that because is this, Paul, did you want to look at MA? Yeah, so here's something else, but this is kind of a similar chart to Tesla in that it's been downtrending and we could be either seeing a period of consolidation here. Like I kind of look at this and it's a little sloppy. I see it kind of still being within this period of consolidation. But and it could be there for months. And others might say, well, I didn't draw those lines. I just saw this as kind of a diagonal resistance breakout. But we're right ahead of earnings. And as we have seen quite often in any earnings season, there is stuff that can really gap up and really gap down. Okay. And somebody else mentioned Mickey D's. So just cute little story. My daughter had a baby girl on Friday. So my grandson Caleb now has a baby sister. And his dad took him to celebrate to a very special restaurant. And it was McDonald's. And he's 2.5. It's the first time he's ever been in a McDonald's. And he was thrilled. He got a free toy in this Happy Meal Playland. I said, like, if you guys hadn't had a baby today, I might have called social services. How can he be 2.5 and never having been in a McDonald's? Or maybe I should give them the Medal of Honor for that. I'm not sure. But I know where grandma's going to take him when she sees him in a couple of weeks. So, yeah, thank you. So it's now Hannah and Caleb. I have both a grandson and a granddaughter. I'm pretty excited. So, this is considered a potential, trend reversal, showing that this downtrend may be coming to a close. But man, that was a pretty big move to the downside the last few days. So the jury's still out on that one. But if we wanted to practice some other, could we look at something like Citigroup? Which is pulling back a little bit today and doing this same kind of thing, like today's high 131, and trade it back up to 135. And you might say, but that's no move at all. But I'm sorry, that's $4, which has got to be worth 3%. Like if you think a $4 move divided by 128, whoops, $4 divided by 128. I can't type. 4 divided by 128. That's 3.1%. It's not nothing. It's not nothing. If you bought one share, I don't know if that would buy you a Happy Meal these days, but and again, if we get, a doji pattern or something tomorrow, maybe that entry is a little lower, than where we might put it if we had a conditional order today. And some people might have said, well, we had a bearish engulfing. I already have a trade on. Well, it hasn't broken this support level yet. But if you're looking at an option, like let's say we looked at an at the money option, and we can do this for the trade we placed on Tesla. So if we come back to our trade tab on Tesla, I just wanted to show you this. Tesla, third time's the charm. So here's our strike. So let's, come back to 10. If we came in and said, well, we want this to go up to 400, right? That's where our exit is. I'm going to switch this to Theo, Price, and Mark. So how much could we make? And we don't want to count our chickens before they're hatched. But if we come over here and we hit reset, and then we say, okay, today's the 28th. What if this came up and hit our target by next Tuesday, the 5th? And it went up by $24. So if it goes up by $24, it will have hit our target. Okay. And then you just hit enter anywhere. So we're at 481, which would have hit our target. So, and then if I just click anywhere, it will, I don't want to do that. So we paid, close to $20, I think, for that option, right? So if we paid, let's say we paid 20 for it, it would be worth about 31.38. And that's if volatility and everything stays the same. We just have the price move. We've got a bit of time decay. But if you looked at that, if I take 31.40 and we divide that by 20, that's about a 57% return. Now, if it went down by $24, to just show the flip side. Now, we've put in an exit that, we want to get out if it loses half its value. If it went down by $24, would it have lost half its value? It would have. We would be out of this trade. because we'd be down over 50%. It would be worth about $7.18. But when we look at time decay, and that was the other thing I wanted to point out. So if I come back up here and we bring up theta, which represents time decay, this is costing us 28 cents a day for our time decay. If though we were to come out here and say, well, we think the move is going to happen in a few days, like our time decay is 43 cents as opposed to 28. And this is 43 cents on a cheaper option. So it's an even bigger, wound, flesh wound. Where here it's a little more modest. And the further out in time you go, the more you're going to pay, but the less time decay is going to be chipping away at at its value. And so what have we done today? Well, we've done a position on Tesla. So where we are going to compare and contrast, right? So we did a stock position and an option position. And then we also teed up a trade on American Express. And it looks like, and that one we don't show as having filled because we put in a conditional order. And remember that we're going to look at that every day until we either enter the trade or decide that we don't want to place that trade anymore. Okay. Okay. So that's what we did today. Just to review, our topic was swing trading. And, we just talked about some different types of entry. This one was based on a diagonal resistance breakout and retest. And this is kind of the beginning of a potential trend reversal, perhaps, perhaps not, we'll see. But as we wrap, I just ask 2 or 3 things of you. One, as I mentioned at the beginning of the webcast, if you are not already following Ben and I in the Land of X, you're going to want to do that. Ben Watson CS and Barb Armstrong CS. Also come and find us on LinkedIn because we are there on a regular basis also. And then if you have never been to a live event, if you go to schwab.com/coaching, and I'm just bringing this up. Here's our coaching team. We are a small but mighty group. And you come to in-person events. You can see our next event is in Chicago. And Kevin Horner and I will be there with Joe Mazzola. I think this will be the only event that Mr. Ben Watson misses this year, if I'm correct. But then, there's a 2-day event coming up in Santa Clara, an advanced options event. It is already bursting at the seams, so I don't know if you can register for that. If you show up on site, we will register you on site, but it's important, like these are free to attend. Then we're going to be doing a 2-day intro to technical analysis and intro to options in San Diego. Ben and I will both be in Santa Clara and San Diego. And then the next one after that is in Chicago in the middle of July. And I believe Rachel will be at that event. But these are great events. We'll have the coffee on in the morning. We'll have breakfast ready. We provide lunch. We'll even pay for your parking, for crying out loud. So it's a pretty sweet deal. So if you're interested in checking those out, check those out. Hit the like button. It helps move this up in the trading algorithm so more people can find this content. Or moves this up in the YouTube algorithm so more people can find this content. Also sounds like applause to Ben and I, as Cameron May would say. Yeah, other than that, guys, have a really awesome rest of your day. I appreciate you being here. I will be filling in for Connie Hill on Thursday for long options, so feel free to join us for that. Up next is Kevin Horner with building a stock portfolio, so stay tuned. Kevin will be with you at the top of the hour. So thanks for joining us today. Thanks to Ben for his help in the chat, and get out there and hug someone you love. I'll see you soon.